Okay, all right. Laurence Balanco is now joining us. He's, of course, the much-tracked technical analyst with CLSA. Laurence, great to have you with us here. Good morning. Prashant this side. Thanks for joining in. I think you were expecting larger downsides here on the Nifty and for the Indian market broadly. Run us through your thought process and the levels here, Laurence.
Yeah, let's just look at what we see on the daily chart and basically the break below the 50-day that we saw at the start of October. We've seen downside momentum now accelerate, and the classic reversal pattern being the head and shoulders that we've seen develop August high, the October high, and then obviously this early October high, forming that formation. And we're really looking for a move back to the 200-day moving average, which sits around the 23,300 area. So we see at least another sort of 5% downside. That'll take the market back to long-term trend support.
Where do we get to, which takes us back to the trend support?
Yep, 23,389. So that's where the 200-day sits, and that's the lower boundary of the uptrend channel of the 2023 lows.
And the market stabilizes there, or you think, and how quickly? What's the time zone here?
Yeah, so if we look at it, we think into November we'll be hitting those downside targets. So within the next sort of 20 trading sessions, we think we'll be down to those kind of levels. Yes, we would look for evidence of support developing there. You know, the last time we tested the 200-day was the intraday reaction to the general elections, and the prior occasion was actually in the sell-off that you saw in March, April of 2023. So we've only been back to the 200-day, the last 18 months on two separate occasions, and we think this will be the third.
Okay, that's a significant downside from where we are. It's over 1,000 points lower, and you see that downside get tested over the next 20 sessions. So we've noted that, Laurence. So let's talk about this leg down that you're still expecting will play out. What looks the weakest to you in India?
Yeah, the sector that we've really been highlighting as where the greatest downside risk is in the PSU space. So if you look at the BSE PSU index, that started to roll over basically from June, July, and since then we've broken down. Yesterday we saw that index break below its 200-day, and that's sort of leading the downside. And if you want to get sort of more granular in this, you can look at the PSU banks versus the private banks. Now, the PSU banks have been great outperformers from the COVID lows up until the start of this year, and since then it started to roll over. So essentially now we've seen private banks hold ground while the PSU banks underperform. So, if we get down into subsectors, but more broadly, PSU is the most vulnerable space here, having broken below its 200-day yesterday.
Hi, Laurence. Good morning and good to see you.
Good morning.
In fact, the PSU banking index yesterday breached the election day lows as well. So that's one of the first indices to breach those lows. Laurence, in these sort of times, you're wondering who's going to bat for the bulls, who's going to come in there and support the Nifty. And I believe HDFC Bank could be one of those candidates. What are the levels you're looking out there? It's gone through that long time correction. How is the price action looking?
Yeah, it is probably the most interesting long-term setup that you have within the Indian market. As you say, it's underperformed for the past 2.5 years. It's been consolidating below the 1700 to 1730 area, which we recently pulled back from, but we're now rising back towards that area. So that's really the breakout point for a significant move of over 40% if we break out from that. However, because we think the Nifty does have downside to its 200-day, we think HDFC will remain in this range, but it'll be a relative outperformer. So it is a place that we think you can accumulate here. And once this correction's over, we think we do see the setup for a potential major breakout there. So use the current volatility as an opportunity to build positions in HDFC.
And what are the levels you're tracking on HDFC Bank if it has to break out? Post this consolidation phase, where is it headed? That's the point number one. And point number two is you're clearly bracing for a bit of a correction. What level would it nullify that view? Above what level?
Yeah, so I think let's start off with your last question. The 50-day has been the key resistance zone. When we broke below that in early October, we've had rebound attempts that have failed below it. So really to negate the immediate downside risk, we would need to see the Nifty take back its 50-day, and that currently sits around the 25,150 area. So that would be point one to negate this corrective view of a move down to the 200-day. Your question on HDFC Bank, the breakout area is just above the 1730 area. So clearing above that, holding above that breakout really gets us upside targets of 2,500 plus. So that's where we would see this breakout taking HDFC Bank once we clear through that 1730 area on a sustained basis.
Laurence, this downside leg, I mean, your primary thesis is this 5% down move, right? Testing the 200 DMA. Is this an India-specific move, or are you noticing, some kind of correlation with other global markets as well? Will others also go down, or is this an India-specific move that's ongoing right now?
Yeah, it's quite. We've seen some short-term pullbacks and consolidation, but as far as this tactical topping pattern that I mentioned earlier on, it is an India-specific story, and it's interesting. It really started when China started to rally, and the conversations were, we've seen some rotation out of India back into China, but the weakness and the break of this 50-day has happened with China really just holding its ground rather than rallying. So this does seem to be more of an India-specific story here that we've seen the correction unfold.
Laurence, you'll be speaking with lots of so-called fast money, right? Hedge funds and those kind of investors. We've seen about $10 billion worth of foreign selling here in India over the last, over this month actually, so far. Is there any sense, any color you can give us in terms of flows, really? What kind, are we talking about a lot of long-only selling? Is it a lot of, hedgy kind of selling?
Well, I think it's a combination, to be honest, right? Initially, it started, the first week of October, we saw selling not only in India, but we saw selling in Japan, as well as bits and pieces in Southeast Asia that was rotating back to China to reduce the underweight positions that a lot of clients had carried for some time. So, India wasn't the only market that was sold down. You can look at Japan too, that was sold down with the rotation going back to the China side. We're not seeing people capitulating on the India positions, but obviously there's a lot of pent-up profits that we've seen with the run-up in India, not only this year, 18 months ago. So we are seeing some natural sort of profit-taking rotation. And the other thing you've got to bear in mind is, coming into a year-end, there is a tendency for markets, particularly in the fourth quarter, to take profits in their winners and look at an allocation to some lagging trades, looking into the new year. So there is a behavioural characteristic to this rotation setup.
Okay, Laurence, final question before we let you go. The good news from an India perspective is Brent crude prices are still well behaved. Last time you told us you expected to be in that $80 to $90 per barrel mark. Where do you see Brent crude prices headed? And what about gold? Month to month, we're seeing fresh all-time highs.
Well, absolutely. Gold's uptrend remains intact. We're well past our upside target where we started the year looking at 26.25 as the upside target, and we're $100 ahead of that. There's no signs of weakness there, and I'd advise clients to look at the charts of silver. We've seen a recent breakout this week, and we get upside targets of $40 to 42 and then 44 to 45. So we actually think that silver is a bit of a catch-up trade on that gold setup. And as far as the oil price and the oil price action, nothing really changed on that. We're still stuck within the trading range. And in fact, within that range of the $70 to $90 area, the 200-day sits around $82. And that's where the recent rebound got to and failed. So in fact, we're consolidating in the lower half of that defined range below 82 and above 70.
Laurence, this last thing, so you said HDFC Bank, you gave us some levels. Any other high conviction trades, either long or short here in India?
Well, we've mentioned the PSU side, and in our reports, we've been talking about Coal India, we've been looking at Power Finance, and we're looking at Maruti Suzuki as stocks that do have weakness breaking down. Maruti Suzuki closed below its 200-day yesterday. We've been flagging that at least as a take-profit setup. Power Finance has been below its 200 days as well as Coal India. So there are pockets where we've seen these trading ranges over the past, not only 2 months, but if you look at Power Finance or Coal India, a number of months that upside momentum slowed and you've started to break some of those longer term trends already.
Okay, so a couple of more names perhaps on the downside, and maybe something like an HDFC Bank could emerge stronger once all this is over. Laurence, thank you very much for joining in. That was really helpful, and we look forward to more conversations in the coming weeks as well. Well, that's a big view coming in from CLSA on the charts, on the technical, saying that the correction isn't over. There's another leg down, and probably it could be 5% lower when the Nifty tests the 200 DMA.